Hi everyone, it's Rob Roy of Elliott Wave Options, and welcome to this week's U.S. market update. We were off last week, so we'll have a lot to talk about this week. On your screen, you're going to see the stocks that we'll be talking about during this video. And as a quick reminder, you can go right to a particular stock that you may have interest in using the chapters feature in the recording. All right, as we take a look at the market, a little interesting on today. I'm going to come back and talk about the entire chart pattern in a moment, again, since we've got a lot of days to catch up on. But you can see we're a little bit down on the day. I thought we might rally a little bit more. As I said, I'll talk about that more in a minute. We did have some economic news that came out today. The Fed's favorite inflation indicator, the PCE deflator, was released today. We had the CPI, the PPI since the last time we talked, and both those numbers on the top line were a little hotter than expected, but then you got to the core area, which is ex-food and energy, and they were better, and I'll save all that soapbox for another day. But the Fed likes this PCE deflator. Now, it came in better than expected. And we did open higher. As you can see the notch on the chart, when we go back to it, it will show you here the little notch on the open there. But if you read through the article, it got down to the point, which I think is why the market sold off, is the fact that consumer spending was way down. It dropped from 9/10 down to like 2/10, something like that. So we know the consumer drives the economy here in the U.S., and if the consumer is pulling back, that's a negative. So looking at the chart pattern again, first of all, you've heard me talk about zigzags so often, you're probably tired of hearing me talk about it, but I talk about them because they work. And here's one right here in the market, and look what happened. We came down exactly, so we hit the 78% fib level, 23.6. Then we look at 50, then we have 61.8, then 78.6. So you look for 100% extension, and that's exactly where the market went. And then on Wednesday, we had this low here. That's a really nice pivot point. And if you're not familiar with pivot points, that's what it looks like, where we have this low, and then the next day we have a lower low, and then the following day a higher low. That's known as a pivot point. So we have a pivot point right at the 100% extension. We're awfully close to the price target I've been talking about of 420, which is support resistance. The low on Wednesday was actually 422. That's awfully darn close. And then you can see on the 10-day moving average, we were a little oversold. We did hit the 10-day moving average on the high. Maybe that applied into the selling a little bit here, played into it. But I really think it was that consumer spending number that kind of took the shine off the market. If we're going to bounce, this is a point in time when we're going to bounce. Sitting right here at the 100% extension. We're right here at the 10-day moving average. We're not far from massive support at 420. And look where the wave 4 is here. Really a 50% correction. So the S&P is corrected 50%. You add all those things in together, and perhaps we get some sort of at least a temporary oversold bounce in the markets. Now, taking a look at what I think has caused this move lower, I have one more thing here, is this gap that needs to be filled as well. So if we do get the bounce, perhaps we bounce up to 440, which was support. Now will be resistance, which would also fill that gap. But looking at the 10-year note, this has been in the news. This is what I think has contributed to the downward zigzag that we had in the S&P, as rates have just been going crazy to the upside. Now this week I've done a lot of work on bonds, and we've talked about this here, and we talk about this a lot on Tuesday nights during our Trade Finder meeting. And by the way, if you haven't signed up for Trade Finder, you can go to our website. You see the link on your screen right now and sign up. It's free. We do it every Tuesday night at 9 p.m. Eastern time. We talk about the markets, we look for trade ideas, and then we have a live Q&A at the end. It's a lot of fun. We have a great community of traders that join us each and every week. Love to have you if you haven't been there before. And we talk about how you need to have at least a working knowledge of the bond market if you want to be a good equities trader, even if you're trading derivatives in equities. And so if we go back here and take a look at the chart of the TNX, you can see that we came right into the middle of this tap box. And this software, for those of you that might be viewing us for the first time, is from the Hub organization, hubb.com. We did a live show. We do a live Q&A every Friday at 2 p.m. Eastern Time on the Hub Financial channel. If you haven't registered or subscribed over there, please go over there and do that. You can join us every Friday at 2 p.m. And we love to just pop on, talk a little bit about what's going on today, and then have a live Q&A. But you can see that we are smack dab in the middle of this tap box, and this software is from the Hub organization. I think it's the best Elliott Wave software that exists on the market. We can see that this move to the upside here was fairly vertical. We're right there. So the bond work that I've done this week suggests that maybe we're topping out on rates. And if we are topping out on rates, maybe that can give us some sort of a move back to the upside, or conducive into that bounce that we just talked about on the S&P, if indeed we are in at least a short-term topping phase on rates. It's very difficult for the equities market, the Qs, the tech stocks, etc., to continue to move to the upside when we have this kind of a move in rates. So that's what I think rolled us over and created that zigzag to the downside, but it was very classic, and you've seen the charts. And then we go and take a look at the dollar, and the dollar is giving us a little bit of reprieve too after being so strong. And I was doing some research on the dollar as well, and feel like there's been an awful lot of global money coming in. I'm still of the camp that we're going to have some sort of a recession, clearly there's some economic weakness around the world. At least that's what I think is creating this move to the upside on the dollar. But at least it's backed off a little bit here yesterday and today. Rates seem to be stabilizing a little bit. Again, all that played into what I thought would be, in addition to the end of quarter, a little bit of a bounce today. So the negative, if you're looking for a negative on the market, it would be that if we don't have position squaring today, which we didn't, the shorts are confident holding their positions. If they weren't, they would have covered going into the end of a quarter and going into a weekend. Didn't happen. So that's a negative as far as, could we go down to the extended level on that zigzag that I showed you? Perhaps the market can go down further from there. I just feel like there's a lot of charts that are showing us that we are at levels of support. So we take a look at the VIX. And by the way, talking about signing up over at the Hub channel, please hit that like button here, or better yet, hit subscribe. You'll be notified immediately when one of these market updates is posted. I saw the comments. Y'all missed us last week. Glad to hear that you look forward to these. And there's a couple comments. As a reminder, as soon as we hit 40,000 subscribers, we're giving away 4 of our level 3 alert services at ewotrader.com. That's 3 different alert services: a directional one, a non-directional one as far as strangles and breakout stocks, and then an AI-based time strategy where we're looking for generating income. It's an income strategy. You're getting all 3 of those, and we're going to give away 4 of them when we hit 40,000. We're getting there, so if you haven't subscribed, please do so, or tell your family and friends. It's a great deal. I mean, it's worth thousands of dollars, and we're going to give 4 of them away. All right, so taking a look at the VIX. A little bit of a bounce back to the upside on the VIX, kind of a little more than I would have thought today. The sell-off wasn't that bad. We rolled over at about 11:30 Eastern time, but you can see that we're right here in this area of where we found resistance. Support has been down here at 13. Every time we've come down to 13, we've bounced, and then we seem to bounce right in this area here around 17, 18. And that's exactly where we are now. So a trading range, if you will, on the VIX, which is kind of unusual. Don't usually see that. So what does that mean for next week? Where are we going to, because I know that's what everybody wants, is where are we going to go next week? And I feel like the absence of any further negative news, we are ripe for a bounce. I just have to keep in the back of my mind the fact that the shorts didn't do any sort of position squaring today, none whatsoever. So, there's an opportunity for us to continue lower from here. It just feels to me like when you've been doing this for a long time, over 25 years, you just kind of get a sense, and it just feels like we want to have some sort of a bounce. Maybe we don't. But That's what it feels like. We look at the Dow, and same thing here, zigzags. I made a comment that one of our YouTube subscribers had said, hey, do you see triangles in your sleep? Because we were looking at a whole bunch of triangles in the market, and that's going back to here. Now, perhaps somebody's going to say, hey, you look at zigzags in your sleep. And I do, because I love zigzags. They are a great directional pattern. They're just 3 segments instead of the 5 waves in a full Elliott wave pattern. But look at the DIA. Look where we are. So again, talking about a position of potential bounce, another perfect zigzag pattern right to the 100% extension, exactly like the S&P. There was the triangle that we had, and you can see the breakout move. That's how triangles work. You get the breakouts, and it went right to the 100% extension, and the wave 4 is exactly at 61.8. Now, the Dow had been the leader for a while. The S&P's only retraced 50%, but the Dow's retraced 61. So it's given up its position of leadership. Is the S&P taking over? No. Here's the leader right here in the Qs. And this is surprising to me. Look, we only have had a 28% pullback on the Qs. Again, same zigzag pattern, so I won't keep drawing these. But I've been very impressed. Not that the market cares that I'm impressed, but the fact that with rates moving up the way they have, the dollar being as strong as it has, you would have thought that the Qs, the techs, would have been the worst performing segment of the market. So the fact that they've hung in there as well as they have and are not correcting nearly as much as the rest of the markets are is a testament to that's where I think things are going. I guess the AI is keeping a bid, at least some sort of a bid, underneath the market. In our live show, somebody asked if this gap was filled. It's not quite filled. So we had the low there on the 20th of September, the high today, didn't quite fill the gap. So maybe we get a little bit more of a bounce. But even with this zigzag down here, only a 28% correction. Elliott himself really wanted to see a 38% correction before he really termed it a corrective move. So this is more of a pullback in the Qs than it is a correction. I'm really surprised by that with what I showed you on rates. And think about this, if I'm right and if rates are a little toppy for now, maybe the Qs are the leader on the move to the upside from here. Looking at the Russell, and another zigzag. So yeah, I'm seeing zigzags in my sleep, and I'm seeing them all over the charts. And you can see that again, look exactly to 100%. You're here watching this because you at least have interest in Elliott Wave, Fibonacci levels. Some of you have made comments that you really didn't look at Elliott Wave much till you found our channel. That's what I want. That's why we're here, is I want to create more interest because I believe this is an indicator that can help everyone become better traders. I'm not trying to tell you to drop whatever you're doing and become an Elliott Wave trader. I'm telling you to add this to whatever it is you're doing, and it will enhance your results from a directional standpoint. Because, I mean, how many of these things do I have to show you that are hitting spot on and moving back higher here? So once again, not quite filling that gap. Do we go down? If we do go down lower, and the IWM is a really interesting one because not only are we at the 100% extension, but you can see all of this consolidation back here. A lot of people look at the small caps as far as whether or not it's a risk on, risk off type of environment, but we have a ton of support and the 100% extension. But if we break this level, and we chatted about this earlier, in our live show on the Hub Financial channel, if we can't hold here and we break down and we start looking at moving down towards this 161.8 level or even lower than that, or lower than 165, it's Katie bar the door time on the IWM. I mean, look, there is nothing there. So this is an area where not only could we possibly find support, we need to find support in this area on the IWM, or it could get real ugly on the Russell really quickly. All right, so let's take a look at Tesla. And so looking at Tesla, here's a triangle. So the person that commented actually said, thank you for mentioning my comment. And of course, love the comments. With oil moving higher, everybody's interested in the whole EV market. This is a really nice setup on Tesla. Something's getting ready to happen on Tesla. Don't know which direction it's going to go. You look at this 5-wave pattern, it's very well constructed. And once again, the wave 4 exactly at a 61.8% fib corrective level. Just like the DIA, you're tempted to say, hey, Tesla's going to break to the upside because we have this 5-wave pattern and we're at a strong level of fib support here on the wave 4. It may break to the upside, but I'm telling you, in reading Elliott's own works, when you have a triangle, it trumps everything, and you have to respect the fact that we could break up or down. So unless you want to put a triangle, something like that on Tesla, which would make sense with this triangle, just wait, let it break out, let it make its move, and at that point in time, then you can make a directional trade at a Tesla. Some other ones to look at, and by the way, these were stocks of interest that you guys asked out of the last video. So I want you to know that I read each and every one of your comments, so please post your comments. Let us know what you think about these videos. Well, let me know what you think. What I'm really interested in knowing is where you think the market is going to bounce now or not, as far as where the Fed is, or is this just a momentary stop before we move to a lower low? People like to get into conversations, and that's what this is. It's if everybody views the market the same way, then there's no market. We have to have opposing views, and we want to hear yours. So please post a comment. As you'll see from these stocks of interest here, I read each and every one of them, and I respond to as many of them as I possibly can. So the next few stocks I'm going to show are ones you all ask about to take a look at. So let's do that. AMD is in a wave 3 to the downside, and not only that, it's in a channel 2, and it never hurts to apply old school technicals to Elliott Wave. I like to look at the DMI as a good confirming indicator, but you can see we're in the upper end of this downward range, and so that's concerning. Now, the thing here is that wave 5 went 122%. So when the wave 5 extends more than 100%, you're only looking for a 61.8% corrective move. And look where we went. We went right to 61.8. So you don't go back to the previous 4. You go 61.8. And so we're kind of hanging around in that area. Now, we're in the top part of the trend channel, but we could have some sort of a bounce to the upside here. That wave 4 forecast isn't too far away. So hopefully we get a little bit more of a bounce out of that. And I think we may, if I'm right, on rates giving us a little bit of a break and pausing on that astronomical move to the upside. You can see we touched the top of the 50-day moving average on the high today, but perhaps we break out of this trend channel and have a little bit of a move. So I think if you're interested in AMD and you're looking for something that you could take a shot at, perhaps this would be an example of one. If you're more conservative, let it break above the 50-day moving average and out of the trend channel. So everybody has their own risk tolerance. I usually try to give you an aggressive or a conservative move. Intel, you ask about Intel as well. Same thing here. Wave 5 went above 100%. So this is a little different, though, in the fact that we're looking for a 61.8% correction, and you can see that we haven't had that. With that 61.8% correction was before the wave 5, so that one doesn't count. So we've come back 50%. Maybe AMD is a little bit ahead of Intel, or maybe Intel bucks the trend. Nothing's 100%, but man, it's a high percentage of the time when you get that correction to the 61.8% level. And the fact that there's so much support there, going all the way back to when it was resistance in June, support in July, support in August, perhaps we come back down to it again. So I would be a little more aggressive on AMD than Intel. So I would just kind of keep an eye on this one and see where we go from here. Even though we are trading right at the 10-day moving average, the 10, 30, and 50 are all right there at the same 38% retracement. I would need to see more out of this before I could do anything long on Intel. The CCI is turning up, so maybe in a short-term basis, we're about to make a move, but I'd want to see that move first. And then 3M, gosh, here's a blast from the past. Haven't looked at this one in forever. And this one, now note here, so these are good examples of Elliott Wave rules. This wave 5 only went 50%. It didn't go past 100%. So when that happens, you do look for a move back to the previous 4. And that's exactly what happened in this zigzag. We went right to that previous 4. Now we're back down testing this low here from the previous wave 5. We are not in a 5-wave pattern now. It's not labeled. And for those of you that say, I don't agree with your labels, these aren't my labels. This is the software that labels them. And the software is programmed exactly to the mathematical algorithm that Ralph Nelson Elliott wrote. I don't label these. All I do is look at them and interpret them and try to analyze them and give you my impression of what I'm seeing. I'm not putting these labels on here. The algorithm does. Ralph Nelson Elliott's mathematical algorithm is what labels these. So again, I just read the charts, and you can see that we're back testing this area. So, if you're looking for some place to go, this one is pretty easy from a risk to reward standpoint. We're a little bit oversold. There's the 10-day moving average. We've got resistance up here at 100. So we kind of have a free run from where we are here up to 100. And your stop is easy. If it breaks here below this low, so the low was 92.41 and then 92.38. So call it 92. If 3M breaks below 92, you get out. Or you look to go short, because then you have, again, Katie bar the door time below that level. So from a risk to reward standpoint, this makes a lot of sense. It's a little more conservative. And so, it's a kind of an area where money goes when things do get a little dicey in the economy. So it's a bit of a defensive sector type trade. But the main thing is it's oversold. You could get a little bit of a bounce. You've got room before resistance and a very short stop here, so you wouldn't take much of a loss if you're wrong. All right, some of the ones that we tend to look at normally, good old NVIDIA. And NVIDIA is trying to hold 420. Interesting that it's kind of at the same price as where the S&P is, near the 420 level. It's held so far, and this is an odd Elliott Wave pattern. We didn't have even a 23% corrective move, but it's close enough that the software labels it. The wave 5 only extended 27%. So I think we're going to see some relabeling here. And some people will poo-poo that with Elliott Wave and say, it relabels all the time. And they view that as some sort of a negative. It's a positive. The markets are dynamic. The markets are ever changing. And if you don't have an indicator that changes like that when the market does, you're going to get left behind, or you're going to be in trades too long that are going the wrong way. That's one of the benefits of Elliott Wave, is it relabels quickly with the change in the markets. So looking at NVIDIA, again, if you're looking for something to be a bit aggressive with the fact that we held 420, you could take a shot long on NVIDIA. And if it breaks below 420, get out, because you got to keep this in the back of your mind. Someday we'll fill that gap. At least statistics say that, but it could be way in advance. But for now, if rates calm down, I could see NVIDIA take off again. It's all going to be dependent on rates, I think. And so it's holding 420, strong level of support. So if you want something, that could give you a little bit of beta here on a bounce, I think NVIDIA makes sense. And as I said, if it breaks below 420, then get out. Again, a pretty quick stop there. And then getting into the cryptos with Bitcoin and Coinbase. Everybody always asks about Coinbase. We'll look at Bitcoin first, back above 27,000. That's key. Super impressed that it held this level here at 26,000. A lot of support. And if we can hold this, we start to get into, really looking at that halving that comes in the beginning of, or the first quarter of next year. Every single time that's occurred in the past, Bitcoin has rallied into it. Hasn't started yet. Is this the start? We've had a few head fakes. We had this run here in June and it rolled over. We tried again here in August, rolled over. Are we starting again? We'll know more next week. So by the time we do next week's update, we'll have a better idea of whether there's follow through here on the bounce off of 26,000. But that's pretty interesting. And then last but not least, Coinbase for this week. Holding in that 70 to 75 range, which is where it needed to hold, because that's support right there. You can clearly see it was resistance back in February, broke above it in March, couldn't hold it, tested it again in April, fell back down, broke it for good there, or at least recently in June. We're back testing it a couple times. We're right at a 70% level, so we're at the area that needs to hold from an Elliott Wave Fibonacci standpoint, and we're also an area that needs to hold from a support standpoint. So I feel like as long as we stay above 70 here on Coinbase, you're okay. And if we can see some sort of continuation out of Bitcoin and the other cryptos, then I think Coinbase follows along with them. They'll get dragged with them along with that move. So I think this is really interesting. Again, a good risk reward if you're looking for something to take some speculative money on. If we can bounce from here and continue, you could do a decent, generate a decent return. If it breaks below 70, I'd be out. So we've got several of these here where a bounce from here could do well, but you have short stops, so small amount of risk, greater potential returns. That's what makes you successful as traders in the long run anyway. So anyway, I know I rambled on a lot, but we had a lot to catch up on. Thanks everybody for your attention this week. As always, enjoy the weekend. Look forward to talking to you again next week. Take care, everybody.
If you like these recordings, I'd like to invite you to join our new Trade Finder Live, where each and every week we do a live webinar where we talk about the market, but we also go a little more in depth into the technical analysis system that we utilize to forecast where the market's likely going to go, and also to identify trading opportunities. Get your free subscription today. Take care, everybody.